top pick number one, Canadian apartment REIT. Now, we know in many places virtually impossible to get rentals.
Yeah, it's interesting. We talked earlier about being careful of defensive sectors, but within the REIT sector, the apartment space is really interesting because, as you know, there's a real lack of rentable space. And Canadian apartment REITs have been very good at acquiring and also building rental units. Now, we know that on new apartments, there's no rent control, but on apartments that come up for being re-rented, you know, the rents are going up. So this has been a theme over the last number of years, but in the last 2-3 years, rental rates are really accelerating. Last quarter, in Q3 18, rental rates for apartments turning over was just under 12%. So the apartment REITs have been growing their cash to be distributed by about 8% a year, which is really attractive. So in the case of Canadian apartment REIT, property REIT, they've got a 2.8% dividend that is growing faster than the other apartment REITs. So this is the type of thing that we're looking for, where we're going to get growing distributions. They've got a very strong balance sheet. Their ability to get into new projects is strong. They've identified an opportunity to add as many as 10,000 apartment units over the next 10 years, mainly in Toronto and Vancouver and in Victoria. So this has been a strong performer. This has been one of our largest positions as a firm and has been a very, very strong performer, even, of course, through the difficult market last year.
We've got MasterCard as your next pick, and obviously a play on the growth in e-commerce.
Yeah, look, you know, we focus on secular themes that go beyond the business cycle. I've talked about Visa. The reason I'm talking about MasterCard today is that they are more focused on emerging markets. So we all use our credit cards and our debit cards for almost everything. Millennials certainly don't carry cash around, but the growth rate in emerging markets is much faster than it is in developed markets. And so MasterCard, I think, is a great way to play on digital payments, which are going to grow at 10 to 12% a year over the next 5 years, whether the cycle slows down or not. And this is one of the reasons that we like it. We like things that go beyond the business cycle.
And then finally, ServiceNow trades in New York under the symbol NOW. What do they do?
Okay. ServiceNow is a software company. It's software as a service. So the strongest sector, period, in the last 2 years, and again, off the lows here, back at relative highs versus the market, is a software sector. ServiceNow makes software which is used to manage workflow in things like companies that provide IT servicing. So they manage the workflow, they manage the scheduling, and help to make sure that things don't fall between the cracks.
You're right.
Okay? So this is a company that is growing very, very rapidly. They grew 35% year over year. They're going to grow about the same rate this year. It's software as a service, so it's not a big investment for people to make. And we're looking for mid-sized companies in this space that really have running room in front of them, and ServiceNow, symbol NOW, fits that bill. That's
interesting, because you do hear of big IT renovation projects or software rebuilding projects that spiral out of control.
Look, it's funny because people say CapEx has been low by companies because they are buying fewer things. But they're sure spending money on software and productivity.
Right.
And all of the companies that do the consulting need platforms to be able to execute, get the work done, monitor their success, and ServiceNow really is the leader in that space.
A friend of mine worked in the consulting industry, and I said, well, aren't these consultants notorious for coming in and charging big fees, and the benefit isn't always there? He said in some cases the CEO himself or herself is older and is not comfortable with IT,
right,
but wants to have a third party there to help him or her, because he's got she's got the IT people coming in and spinning a big yarn, and he or she wants to have somebody to push back.
Well, I think that's probably true. And in the case of ServiceNow, they really are, their customer are the outsourced IT companies that are running companies' IT for them.
Right.
Right? Because it really makes no sense for you to have a big in-house team when you can outsource that to somebody who's far more efficient at it, where you don't own all the equipment and so on.
Yeah.
And ServiceNow helps those businesses to execute and provide the services to the companies they're working for.
And I guess an underlying theme there is companies more and more obsessed with security.
Security, managing the costs associated with IT, which are very significant, managing their capital costs and not having to buy a bunch of equipment, but making sure that they get a service level that's going to be high enough that it doesn't interrupt business.
John, maybe I should phone up my IT people right now and say, thank you very much. The system is working really very well. All they ever hear is griping. Anyway, David, always great talking to you.
Thanks very much for having me.
David Burrows has been our guest on Market Call. Thanks very much indeed for watching. The Encore airs Monday through Friday, 11 p.m. Eastern, 8 o'clock Pacific. And we're live Monday through Friday at 6 p.m. Eastern with Market Call tonight. We'll be back tomorrow.